All right, all right. Good morning, everybody. Happy. What is today? Today is Veterans Day. By the way, I was trying to think of the day of the week, but I know it's Veterans Day. So, by the way, thank you to all the veterans out there. Appreciate you all so much. Can you guys all hear me? Let me make sure you can hear my voice, see my screen, all that fun jazz. Everybody good with that? Beautiful. All right, let's go ahead and get rolling. So, we have kind of a little bit of I'll call it a dual role this morning. We got the active trading intensive class going on, and I'm simulcasting the daily market commentary. So I've got kind of both going on at one time just to make, so if I'm going to deliver the beginning of the market, we're going to start it early. So those of you guys that are in the active trading intensive class, please feel free to use your microphone, turn it on. You guys that are at home on the daily market commentary on YouTube will not be able to hear them because I didn't share their sound. But if you guys have something you want me to look at, please make sure that you stop me. Sound good? Everybody good? Sean, Taurus, Liz, Trent. All right, I'm going to share my screen because I want to go through the morning. I mean, this is, we're looking at futures market, so we're going to go through the morning just like we do in any other daily market commentary and taking a look at our futures opportunities. And then Corey's going to take a look at our one-day SPX options trade if one shows up, right? We're not going to really know if that's going to make sense until the market opens up. So let's just kind of go through our markets this morning. And if you, as you guys are following along, if you've got questions or something to add, make sure that you let me know what is on your side. So starting with the S&P. So the ES this morning, we can see that we are sitting at about 24 points higher, rallied up yesterday, but it was really sideways most of the day. I mean, it was very much sideways most of the day. Matter of fact, set up for a little bit of a breakout last night. Didn't really do a whole lot. When you guys look at this market, and we talked yesterday about the, starting with our big picture and then scoring our levels using the trade optimization plan. When you look at this market, what is our trend direction? What is our trend direction? What do you guys see there as our trend direction in here? Yeah, I'm seeing an upward trend. We got a very strong pullback, but when we look at our swing highs and swing lows, now I will be interested to see what the zigzag indicator here tells me. And yeah, we can see the different, it's giving me actually a little bit of a swing here, but ultimately the swing highs and swing lows still look like they're heading more on the upward trajectory. And so that would tell me that I want to be more of a buyer. Now, interestingly enough, is that we saw a rally in the S&P. We didn't see as big of a follow-through rally in the NASDAQ yesterday. Not as big of a follow-through rally in the NASDAQ. NASDAQ's up 1% this morning. S&P's up a little less than 1%. And so we have an hourly supply level up above me. But if we want to use, and I'm gonna trim that supply level down. Now remember, we're looking here just at the wick over wick. And when we think about this wick over wick, we'll talk later today in the class about why do those wick over wicks work the way that they work from an efficacy standpoint, because it has a lot to do with the origin of the move here and then price kind of chopping around and basing. This, though, cannot be a limit entry. And the reason it can't be a limit entry is because my big picture trend is telling me the other way around, right? My big picture trend is telling me that I need to be a buyer more than likely. And so what I'm going to do is put an alert right here. And this would tell me, okay, I'm interested in being a buyer, or excuse me, in being a seller once we trigger the alert and then we trade out of the zone. Now, the other side of this is what? What's the other downside of this level right now? Can somebody tell me what the downside of this level is? Yeah, we've got basing in front of the level, right? It's that basing that we're seeing in front of the zone. And when we have basing in front of the level, we've got to go back to our concepts of measuring our reward to risk. And I think it was it Kurt yesterday who asked this? I forget who asked this. It wasn't, but my stop theoretically should be up here above the pivot, right? That's really where my stop should be, would be above this pivot. Now I can go to the 15-minute chart And if I trim it to the 15-minute chart, my other alternative is to do above the wick of the leg-in candle on that zone. So above the wick of the leg-in candle. Here's my leg-in candle to that zone. So the tightest my stop can be would be right here. So we're going to make this to the tightest my stop could be, which would be right there. Just above the wick of the leg-in candle. So now, right-click on that, duplicate drawing. That now tells me that I'm basically looking at a 1-to-1 reward-to-risk ratio on this trade, right, due to the basing that we're getting in front of the level. So while this level is okay, it's the two things going against it are, number one, it's counter trend, right? It's a counter trend level. The second thing going against it is that not only is it counter trend, but it doesn't give me a quality area of reward to risk. So I still have it set as an alert in place. It's just not the greatest one, right? The other side is, and I think Nick pointed it out, the time of day that it was created is not the greatest time of day. This was created at around 1 to 2 in the afternoon Eastern time, U.S. time, excuse me, which is not the best time to be looking for those opportunities. So let's say that we do come up into there. How do I plan for that accordingly? Well, I think that the best thing that can happen in this trade, the absolute best thing that can happen in this scenario is that price rallies up to there and we get a bit of basing in here. Why would basing in here be okay? What would that do for me? Trent, you got it? What would basing do? Very good. The basing would set up a breakout above this level. Now, the good thing about that is that now gives me a trend following opportunity where price can continue to run. And if price continues to run off of this trend following breakout opportunity, what's my stopping point for where price is going to stop at this point? Right? What's our stopping point for where price is going to stop? Well, I've got to go to the bigger picture chart. And when I go to the bigger picture chart, which is my 4-hour, that sets me to a brand new all-time high. Right? I don't have an opposing zone above me because it would put me to a brand new all-time high. So that's a decent way to think about getting in to an all-time high is above a breakout. Now remember, this was the move on the vaccine announcement where we talked about, okay, listen, don't get your ponies in an express. I don't even know if that's a phrase. I just made that up. Just allow price to come back to get you an entry to get long. And I think that the best way from what I've seen to get long is on the breakout of if we get quality basing. Now, what about pullback levels? So pullback levels for today, you do have a decent wick over wick area of demand right here. That is interesting. The only thing I don't love about this is the fact that we have this over here, this wick over here to the left, which makes it a little bit less clean. But on a pullback, you have a decent setup to this area right here. Thoughts on these levels on the S&P? Any questions?
I got a question just in general.
Yep.
I know you always use trend to decide whether you're bullish or bearish. Do you ever make any exceptions to that or take anything into account like the dollar or the VIX or the gold?
Yeah.
What bonds are doing?
Yeah, so that's a good question. And for those of you guys that couldn't hear it at home, his question was around, do you take into account the VIX or the dollar or what gold is doing, or do you just use trend to determine whether I'm a buyer or whether I'm a seller? For the most part, I just use trend. I don't really look at the correlations in those markets, and here's why. Most of those correlations, in my experience, especially in the last few months, have been, I don't want to call them broken, but unreliable at best. right? I think unreliable at best is the best way that I would put it. And because they're so unreliable, that's why I'm not a huge fan of them. Used to be that you could write a check on the dollar and the S&P. I mean, you could write a check, dollars at supply, S&Ps at demand, best opportunity you're going to find, right? It's not that way anymore. It used to be significantly more probable, but I think that's changed a fair amount. So, Jersey Trader says, was looking at the Globex trap on the 15 minutes, 35.83 by 35.94. I see what you're looking at. So you're looking at this upper wick right here for the Globex trap right in there. So I can definitely see that 35.83, 35.94. It actually ties in very well with our hourly level, which is that wick over wick, which is where we've got our confirmation. So might it get to here in reverse, a little bit ahead, possibly, but I still think that because of the upward trend, I don't know that I would want to trade it in that way. Does that make sense? Let's see. Mesnock says supply 34.73 on the 15-minute. Yeah, so that 34.73, I don't really like that either. And the reason for that is because we chopped around sideways. Matter of fact, I would say that you even may have a potential breakout on the 15-minute chart if we base in front of there. Oh, 34.73. Sorry, my fault. Ooh, 34.73. I got to go out a bit. Yeah, there's a 15-minute level there. I don't have it marked off because we're pretty far away from that zone. But yeah, I mean, there is a level there. The only downside to this level, one of you guys at home tell me, we talked about this yesterday. What's the downside of this level? What's the downside of this level? What's the thing that makes this level less probable than others? What do y'all think? Because it is formed at a good... So the level was really, really close to being retested. And by being really close to being retested, by definition, what we have to do is convert that to a confirmation entry since we've just about retested it. The other thing is, well, time of day is okay on that one, John. I'm okay with the time of day that it's created. What I'm not okay with is by the time we get down to there, also, by the time we get down to here, we will have had a lower swing low and a lower swing high. So our uptrend will have changed direction as well, right? That's the other thing to consider in there. So I don't love the 34.73 demand for those two reasons. What's up, Nick?
What's going on, guys? How you doing?
Living the dream. Hey, I love you, but you got to take that Yankee hat off.
I'm going to wear it all day now.
Yeah, rub it in. Listen, my problem is I'm a Pittsburgh Pirate fan, and so the Pirates are going to have the first pick in the draft this year. That's going to be really good for the Yankees in about 6 years. Because, all the good Pirates draftees wind up going somewhere else. All right, moving to the NASDAQ. So any more questions on the S&P? I know I spent a little bit more time today on the S&P than usual, but any questions on the S&P? All right, moving over. NASDAQ. So NASDAQ this morning, we're up 108 points in the NASDAQ. I actually really like the NASDAQ hourly supply better than the S&P hourly supply. Why would I like the NASDAQ hourly supply better than the S&P hourly supply? Well, a couple of reasons. Number one is that the hourly supply on the S&P, which is that same wick over wick, we are basing close to it. The NASDAQ, we're not basing as close to that level. It's a little bit further away. So that's number one. Number two is that it's formed a little bit earlier in the day. Not a lot, a little bit earlier in the day. And then number three is that it's a whole round number, 12,000. Do whole round numbers matter? Well, look at our Dow Jones, high of 30,000, exactly to the T, to the point. There were so many sell orders sitting there at 30,000 that the market just hit it, kissed it, and moved away, right? So now when I look at the NASDAQ, I've got this 11,968, 12,045. So we're looking at 12,000 there at our essential reversal point. It's also an old area of support. So I'm going to leave that one in place. I think that's a good one. Now, technically, when I go to the 4-hour, my 4-hour trend here versus the S&P, if I just put the two of them next to each other, you'll note that in the S&P on our 4-hour, we looks like it's still more of an upward movement, whereas in the NASDAQ, this is a very clean swing low, isn't it? A very clean swing low, followed by a lower swing low. So the NASDAQ is, in my mind, fundamentally weaker. Now, what's causing the weakness in the NASDAQ market relative to the other markets? I think what we're seeing in NASDAQ is a little bit of the stay-at-home tech stocks suffering from we'll call it a vaccination possibility hangover, right? Think about that. What happens with a lot of these vaccines, a lot of these stay-at-home stocks, if the vaccine, well, you look at Zoom yesterday, I mean, really took it on the proverbial chin, right? The other one, it didn't take it, as bad, but Microsoft came down pretty good, and Microsoft Teams is good. Slack is Slack's already been getting hammered, but it got hammered a bit more. So all of those levels are showing a fair degree of weakness, and that's why I think that we're seeing the NASDAQ, even Facebook, with the possibility that human beings might see each other again someday, even Facebook is coming down, right? Well, when I look at the NASDAQ and I look at, some weakness, the NASDAQ to me makes the most sense as the better level for that zone. Now, let me trim this area up to make it more accurate. 11,973.4, we'll call it, and I'll do 0.25, and 12,045.5. So right in there. Where's my stop have to go? Well, the tightest my stop can be on the 15-minute would be right here, right? That's the tightest my stop can be. Is on the wick of the leg-in candle of the base. And this is my leg-in candle to the base, and that's the highest wick above there. So that's your zone. Now, that zone might be too wide for you. If that zone is too wide for you, move down to the micro level. I think that one's actually a pretty decent setup. On the bullish side of things, once again, if we get to this 12,000 and we get the 6 candle rule and we start basing inside of there, then it becomes a very strong candidate for a breakout. As far as in between, what might happen on an intraday basis, we do have a little bitty 15-minute level here and then one right here. So in looking at those 15-minute levels, I like the lower one better than the higher one. Now, typically, the higher one is a better structure. It's a more clean wick over wick. The lower one is not as clean of a wick over wick because we've got a much higher first wick and a much lower second wick. But when I look at this area, this is where we are a better time of day. Everybody see my time of day right there at London Open? Much better time of day. And it is closer to the pivot. So the way we normally handle these trades is confirmation entry on the first one, limit entry on the second one. Questions at home on this one? Sean, you've been awful quiet this morning. Taurus, anything? Any questions?
I have a question, Chuck.
All right, Kelly, what do you got for me, man?
On that bottom zone, would that be a drop phase rally?
On a smaller time frame, absolutely. So his question, if you guys couldn't hear it at home, is that a drop-based rally on a smaller on that bottom zone? It is. Because this long upper wick means that we dropped down to here, we probably came up to here, base, and then rallied up. So if I went down to a Yeah, I know, John. The unmentionables on the 5-minute time period. If I go to the 5, actually, it's not really a drop-based rally when I go to the 5, Kelly. It's a rally-based rally. When I go to the 5. Yep. I avoid the 5, right? The 5 is the unmentionables. Yep. Yep. So the difference when I'm talking about a clean wick over wick versus a not so clean is really what it comes down to, the length of the wick relative to the body. So you can see in this area up here, let me draw that out here real quick. In this area up here, those two wicks are the same length. So we've got a wick right here and a wick right here. Those two wicks are the same length. Whereas down here, my upper wick is much bigger than my lower wick. Okay? So when I'm looking for a clean wick over wick, and Corey's typed it in, I think the better word might even be balanced. When I'm looking at a clean wick over wick, I'm talking about the size of each of those wicks relative to one another. Does that make sense, Sean? Yeah, Corey, maybe I should use that phrase, balanced versus unbalanced. It's an unbalanced wick over wick at the bottom. It's a balanced wick over wick at the top. That's probably a much better, a more descriptive phrase to use on there. All right. Yeah. Well, that's why we don't go to the 5-minute. No, I'm just kidding. No, you're right. It's not as clean on the 5-minute, not at all. But I would never have seen that because I don't feel the need to go down to the 5-minute. But that, what you're saying justifies the reason why we have the first level as a confirmation entry, and the second level as a limit entry. Yeah. Sure. And here's why, Trent. I will do that if I find the wick over wick on the 60. I'll go down to the 15. But if I find a wick over wick on a 15, I'm not going to go down to a 5, because here's what happens. Then I find a wick over wick on a 5, and I'm down to a 2. Right? Oh, I know. I've just and for me, and I think this is good for a lot of people, I've just come to a really, really, really hard stop of nothing. No wick over, no 5-minute chart. Pulled it off my life. So it's like some people I know that they say I'm just not going to drink vodka. It just makes me mean. I'm just not drinking vodka ever again. I'm not doing a 5-minute chart. It just makes me just fights my very nature. Although John Hammer, what's that, Kurt? The quantum realm is dangerous. Stay away. Although John Hammer keeps tempting me to go back in. I ain't doing it, John. I ain't doing it. What do you think about a breakout above 11,785? So a breakout above 11,785. So when we look at this area here, go a little bit higher. I think we would just need to get quality basing, but I think it's totally fine. Nick, I think a breakout above here is a totally acceptable trade. Knowing, though, that I would need to get really good basing. I like it better on the potential on, the S&P actually is probably a little bit better for that because you've got more clean run, but either one is going to be okay. So now, by the way, when I see this many different opportunities in there, sometimes we just kind of chop around in between all of them. Right? Sometimes we just chop around in between all of them. All right, the Russell. So looking here at the rut, this one, when you talk about a potential for a breakout, I think, is your best play. If we look at that rut and we're looking at a triangle pattern, Corey, I still love you, man. Looking at the rut here, we've got this 1751. We hit it, dropped away, basing in front of it. This could make a pretty decent breakout. And if we do get that breakout, then that takes me up into this area where we had that all-time high. So the rut is up the least this morning, up 0.5%, whereas the NASDAQ's almost up 1 and the S&P's up 0.67. So it's lagging a little bit this morning, but on an hourly breakout trade is a pretty good setup. On a pullback, the origin of our big move from Monday has not yet been retested in the Russell like it was in our other markets. So that's still very much in play. Going down to like a 15 to look for a reversal trade, I don't like any of this stuff in here. None of this is clean for me. And so I would stay clear of that zone and of those areas. And then the Dow, we looked a little bit at the Dow yesterday. And yesterday we talked about the definition of basing would have to be inside of this green candle. Well, we never even came close to this level, did we? I mean, we didn't even come close to this area. So that level is still valid. Since we didn't come into it. Interestingly enough, look at this. This is the wick over wick on the Dow. That's the equivalent. Remember, formed at around 1 p.m. That's the wick over wick on the Dow. That's the equivalent of the wick over wick here on the S&P, right? Formed at around 1 p.m., formed at the same time. And on the NASDAQ, which we're not even close to it yet on the NASDAQ. But notice what we're doing on the Dow. What are we doing on the Dow's area here for the wick over wick? We're basing inside of it, right? So when we're basing inside of it at this level, this is usually a good opportunity for an upside breakout and for price to continue to move. So when you're talking breakouts, because I know, Nick, you pointed out the other one on the NASDAQ, the Russell and the Dow, I think, are overall better breakout trades than the NASDAQ and the S&P. All right, questions on any of the equity trades? I know I spent a lot longer on equities. Yes, so we did talk a little bit about that. This one right here. Yeah, a little bit of a retest of this zone above, number one. And then number two, I think that the hourly level is more of a price magnet than the 15-minute level would be. And it's already a confirmation short because it's an hourly level. So question I got was stops on the Russell breakout. So if you take the Russell breakout, where does our stop have to go? What's our rule on where a stop goes on a breakout? Below the last pivot low. In this case, it would be ideally right about here. And if we go to the 15-minute, you could theoretically even go right in here. So let's see if we get a breakout in that position. Okay. Oops, hold on one second. I got 900 things opening up. All right. Okay, good. All right, let's move off of equities if you guys are good on equities. And somebody do me a favor, keep an eye on the Russell breakout trade since the markets have now opened. Now, by the way, just because I drew the lines here for an ascending triangle doesn't mean I'm taking the short off the breakdown of the ascending triangle either. I really still need to get the right setup for a breakdown. And you could theoretically get a breakdown setup here at about 1733, but it's just not there as of yet. All right, energies and metals. So looking at our energies and metals, crude oil being the first, we had this breakout trade in crude, yesterday, throughout the day, it took us all day to kind of pop around and through there. We did eventually, make a decent run of it on the breakout in crude later in the day, which that was yesterday while Corey was teaching the option session is when we got the breakout in crude. I'm not sure if anybody take that at home? Anybody take that one? The breakout in crude? Because that was our level.
I did not, but do you have an issue taking, I thought it was too late in the day because the volume would be too low.
I'm okay taking a breakout late in the day, so long as it's not Friday. Because I know that I'm not going to get a big gap. So I'm okay with the breakout late in the day, provided that it's not Friday. Now, in the overnight, which, John and Nick and a couple of you guys that are awake, Jose maybe, that are awake, that are out there that had a chance to take the little bit of a breakdown, you got a really nice little move down from here, but we've come just about to the opposing zone. So since we've come to the opposing zone, I'm going to completely remove that. Looking at this on the 4-hour, you've got another breakout area here at 43.74, but that was from a while ago. So I think a pullback is in order if we get a deeper pullback. I just don't know. I feel like this feels a lot like a wick over wick, or a candle to candle trade opportunity here on an hourly chart, because it is such a move up and a nice pullback. That to me is a candle to candle trade opportunity. If it doesn't happen, I think you could have a trade down in here. Let me trim that to the 15 and see if it's a cleaner. Candle to candle long on the hourly, yeah. I mean, it feels very much like it. I don't know that I'm not jumping in it right now because I don't want to make an impulsive decision just because it's setting up at the moment. But it's got the right setup for it, right? When you think about it, that's nearly a spinning top candle. There's nearly a spinning top candle in here, and then we would have a breakout, up above that region. Okay? So just a thought is what it may set up for. Gold yesterday, we did get our move away in gold, and this is one of those pictures, let me zoom in on this a lot, where if you got in, you got a little move away. 6 candles later, you go, okay, it's not doing anything. And then in the overnight, we hit that level again, and then it's really when it started to make the move down, which kind of sucks, but c'est la vie, right? So you maybe took a little bit of profit off of this move down. We looked at it yesterday. I think that on a retest on a 15-minute, though, we have a potential entry up here. Now, it's not the cleanest of levels, but it's fairly narrow. $18.69, $18.71, fairly narrow zone that has the 4-hour on our side, right? The 4 hours on our side, lower swing high for sure, and lower swing low for sure. So the 4 hours on our side, and that's a fairly recently created 15-minute zone that was an old bouncing area. Thoughts on that? All right. For those of you guys that are watching on YouTube, I'm going to do a couple more in the currencies markets, and then I'm gonna log off the YouTube, and then we're going to continue with class on this side. On the currencies market, I'm going to jump ahead a little bit here. On the currencies market, starting with the euro, we looked a little bit at the euro yesterday, and we were kind of in no man's land in currencies. Wasn't sure what was going to happen. When I look, here's where I'm going to take a quick look at the dollar. Whereas I see a little bit of a bounce up in the dollar over the last few days, so we're seeing the currencies coming down. Absolutely, I will, Jersey Trader. We will post all the grids to the TA site. Absolutely, they will be posted today. I just didn't want to do that at the moment. I'll catch that later in a few minutes. All right. So here in the euro, we're coming down. Looks like we've hit an hourly demand, but that hourly demand, we kind of based in front of it here a little bit, making it a bit weaker. We're in it, so it's not like a total failure at this point, because it hasn't fallen all the way through. I think it's going to fall all the way through, and I think that your better trade is a retest to a short opportunity if price indeed comes back up. Now, looking at this, my eyes immediately go to this as the best level, which is not overly close. There's two reasons why my eye go to that as the best level. What are my reasons for that? Tell me at home, what are my reasons for this as my best level? Those of you guys that are familiar with what I look for. What's that? I didn't hear you. It's a flip zone. So this is a zone, an area, a fair price value area where we've seen, I mean, look at how much we bounced off of this area in the past. Look at that. I mean, we just hovered off that level in the past a lot. The other reason is, there's another reason. Time of day, very good. Time of day is amazing on this level. This is our absolute best time of day to look for levels in the euro, right there at the London market open. And we have a wick over wick that's fairly close to the pivot high. Now, technically, this wick over wick here is closer to the pivot high. So I like this right up here as a good opportunity. Short at 11784. Oh, did you get short there, Amit, or are you still short there? You're short from that level? Good. Thrown by your Texan clock. Oh, that's right. It's 1 o'clock. 1 o'clock because we changed our time zones. All right. Either way, right there at that London Open time of day is about the best time of day. Good point, John. My Texan clock is a good clock. It's a bigger clock than anybody else's, John, because everything's bigger here in Texas. On the 4 hour, our trend is definitely still down. Now, I will say we're coming to a nice little wick over wick area here in the 4 hour that could serve to bounce us back up to those areas of supply. I don't typically draw zones on the 4 hour, but we are coming to a wick over wick area here on the 4 hour above a pivot low that could just serve as enough to bounce us up to those levels of supply. I don't know that we're going to make it all the way back up to there, though. That's my only concern. And so on the 1 hour, that's the cleanest one that I have. Anything else would be forcing it. What do you guys think? Any other thoughts? That one looks better on a 5-minute. Trent, I ain't doing it. You're like you're like a pusher on the corner. You're like, hey, I got a little 5-minute for you. You're right. It doesn't. All right, Canadian dollar. We looked at this one yesterday for a brief few minutes as a potential, and it just didn't hold up. It failed out on us. But there's nothing wrong with a failed out trade, because a failed out trade oftentimes is going to set me up for better opportunities in the future. And I'm looking at really just kind of the big 4 hour, call it what does Sam Evans call it? The Goliath chart, for those of you that remember Sam. That big 4 hour chart here, I don't know that I've gotten a really strong move yet to turn to tell me, hey, we should turn directions here. But what I do see is that above me there is a decent little supply area that's been formed on this most obvious move down. One here and one here. Now, the one up here, not as clean. So not as clean and not a good time of day. The one up here is not a terrible time of the day. Those early mornings are usually going to be pretty good. And so worth considering, worth looking at. All right. And then bonds, we don't have any bond trading going today. The bond markets are going to be closed for Veterans Day. So no reason to talk about the bonds moving at all today. We may see light trading today in general. I'm wondering if we're going to see some light trading today in general, just due to the Veterans Day holiday. Most of the banks are going to be closed here in the U.S. The trading and the markets are open, but most of the banks are closed in the U.S. So I'm wondering if that's going to have anything to do with it, which may set up for a decent options trade. All right. Bonds and currencies number 2, numero dos. Our 1 hour level in the New Zealand dollar has hit and started to move down, but I need to remove that level, especially in the context of the fact that we are really trending up higher. So looking at a pullback long opportunity. Unfortunately, that Larry is the best one, but it's a really long lower wick, which is going to scare a lot of people out. For those of you guys that are trading the New Zealand dollar, and anybody at home trading the New Zealand dollar, let me know. Shake your head, thumbs up, thumbs down if you guys trade that one. Nick does. Liz, okay, good. So it's worth continuing to look at. I got to make sure. Jose always asks me about it, and Jose, I look at it for, if you're watching this on recording, I look at it primarily for you, because you're the one who always asks for it. But that's why we look at it. So I think that's a little long on the tail, but it's actually a pretty clean setup, and it fits into a nice decent pullback area on the 4 hour for price to run higher. Ryan, can the New Zealand be traded in the futures market? Yeah, Ryan, that's actually what we're looking at right now, is the New Zealand dollar futures /6N in Thinkorswim. All right, Great British Pound. Yesterday, we had looked at a potential breakout above this area here. We actually did get a really clean breakout in the pound and got a really nice strong move throughout the day. I'm going to remove it at this point, obviously. 15 minutes short, very similar to EC trade. It already worked. Ah, yes, I see that. This one right here off that little wick over wick. Nice catch on that, John. There's another one that's actually set up right here. And Trent, you can go tell me if it looks good on the 5. I'll believe you. Change that to purple. And then that allows us to kind of ride the wave. So long at 1.3197. Somebody's asking about the long at 1.3197. So this area right here for the long. Yeah, that's a decent long. My problem with that long is that I got basing right here in front of the level. And on a 4 hour, we're still in an upward trend. So the long definitely makes sense. But the basing in front of the level scares me away. I want to take a real quick look at my MACD on here. Yeah, so one of the things we're definitely seeing is our momentum shift coming back down. So you can see that I've got much higher swing highs in price, lower swing highs, or the same swing highs in my MACD. So while yes, there is a demand level there, I'm not a huge fan of it because of my momentum slowing and the basing we're getting in front of it. Yes, Kelly.
I'm short on a pound there at 32.55.
Okay.
Where do you think the target would be then? 31.90?
Well, if you're short on at the 32.55 off this area up here, which by the way, nice short. I'm glad you caught it. I think 31.90 is a good target. I think that's a pretty good target. Yeah, I would at the very least take your stop though, Kelly, and move it down to right around your entry, or even right here to 32.43 to lock in a little bit of profit. Lock in some profit, make some money on that trade.
I did. I took one trade off already.
Good. Take a little off at the 2-to-1. Let's see. NQ's taken off. So NQ, we got our breakout above this 785. So let's see if that continues to run as that one kind of hit that level and is breaking off. Do we have it in the, and look at the rut, exactly the opposite. The rut's doing 100% the opposite of what the NASDAQ is, which is why we set it up for the breakout, right? Because I don't want to take it before the breakout sets itself up. The Dow is also doing the opposite. It's coming down, whereas the NASDAQ is up a little bit. I would be a little cautious of this NASDAQ breakout based upon the fact that the other two markets are doing exactly the opposite. But who's to say that those other two markets won't reverse and come back up and drive this up to this area of supply? I think this area of supply is a price magnet. Yeah, Dennis, I'm not a fan of when they move in opposite directions either, especially on a U.S. market holiday, which today technically is. Even though we're open, it's still technically still a market holiday. Japanese yen. That's what my eye immediately goes to, is a breakdown below here. I mean, instantaneously, I see a potential breakdown setup because think of it like the way I like to think of this picture is imagine that I had a tennis ball and I drop the tennis ball from right here and I drop it down. What's that tennis ball going to do on the table? Let's say I drop that tennis ball on a table. What's it going to do? It's going to bounce. And the first time it bounces this high. Then it hits the table again or come close to the table and it bounces this high. And then it hits the table again and it bounces this high, right? That you eventually, what happens to that tennis ball? What does it do? Falls off. It goes to the ground. It falls off the table, right? If I drop a tennis ball right here and it goes boing, 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 and continues to move that way, it's eventually going to fall off the table. And that's one of my favorite breakdown setups. All right. Let me see here.
Can I ask a quick question on that?
Of course.
So your breakdown line, I appreciate you've probably drawn it a little bit approximately, but would you put it down under the wick from the candle?
Right here?
Yeah, under there, or would you put it underneath the Globex low where it's being sort of clearly facing it? Right. Which of the two?
So I think your better trade to be a little bit less approximate is underneath the wick. That's the more accurate place to put it.
So would the basing that we've just recently seen not be yet sufficient?
It's not quality enough yet. Nope, it's not.
You need more basing closer to that breakout.
Close to this breakout line, absolutely, because this is still, I mean, you're still probably too far away for basing in here if you're using this. Now, if you want to be a little bit less, because I have known lots of traders who say, well, one wick is not going to be enough to violate it, and I'm okay. And I'm okay if you're a bit more approximate on there, but the more exact and precise way to do it is below the lowest wick. And that's going to be that's going to be your lowest risk entry, I think, as far as the number of times that it'll fail on you. But it's also going to be the entry that is most unlikely to give you three true bounces and a true breakout. Now, on the hourly chart, if we do get one more bounce, that little wick over wick could be where we bounce back up to. All right. So those are the levels. I think I'll share all of these with you guys. Those of you guys that are watching on YouTube, I'm going to end the live stream here in a few minutes. We're going to keep going. We got a bunch more stuff to cover in the class. Do me a favor. Those of you guys that are on YouTube, hit the thumbs up button. I'd appreciate it. It means a lot. I'm going to end the live stream here on YouTube, and I will, for those of you guys that are Traders Army members, I will post these grids here probably in the next 15 minutes so that they're up on the room. So, all right, everybody. Talk to you later. All right, so those guys are out.